This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The United States and Russia quarreled in public on Wednesday over the intensifying Ukraine war after U.S. President Donald Trump warned that President Vladimir Putin was playing with fire, and Moscow massed 50,000 troops near a Ukrainian region. While world leaders bicker over the prospects for peace, the deadliest conflict in Europe since World War II is heating up fast. Swarms of drones are being launched by both sides while Russia is advancing at key points along the front. Trump, in a post on Truth Social, said that Putin was playing with fire and cautioned that, really bad things would have happened already to Russia if it was not for Trump himself.
Oil prices inched up on Wednesday as investors considered supply risks after the U.S. barred Chevron from exporting crude from Venezuela under a new asset authorization, though expectations of more output from OPEC Plus continued to limit gains. Brent crude futures rose 7 cents, or 0.1%, to $64.16 a barrel by 0640 GMT, while U.S. West Texas Intermediate crude gained 9 cents, or 0.2%, at $60.98 a barrel. The Trump administration has issued a new authorization for U.S. major Chevron that would allow it to keep assets in Venezuela but not to export oil or expand its activities, Reuters reported on Tuesday citing sources.
Moving on to the top news in the energy sector.
President Donald Trump's latest orders seeking to revitalize the U.S. nuclear energy industry could pull the uranium market out of its current lull and boost investor interest, industry experts said. Spot uranium prices have fallen about 30% from peaks hit in 2023 as institutional investors pulled out, spooked by recession fears and geopolitical instability. The prices briefly declined to $64.30 per pound this year after they touched a 14-year high of $82 in February last year amid a global clean energy push and expectations of tight supply.
Dutch and British wholesale gas prices were little changed on Wednesday morning amid stable supply and weak demand. The benchmark Dutch front-month contract at the TTF hub inched up by €0.10 per megawatt-hour, MWH, to €36.84 per megawatt-hour by 0824 GMT, while the July contract was also up €0.10 at €36.95 per megawatt-hour, LSEG data showed. The British day-ahead contract was down 0.70 pence at 87.80 pence per therm. Northwest Europe should experience above-normal temperatures from next week and wind generation is quite strong, which usually lowers demand from gas-fired power plants, LSEG data showed. Next, we have the top news in metal markets. Gold steadied on Wednesday, as investors bought on the dip, although gains were capped on easing US-EU trade tensions, with the market now awaiting the upcoming U.S. core personal consumption expenditures report for interest rate clues. Spot gold was flat at $3,302.22 an ounce, as of 0621 GMT. Bullion fell more than 1% in the previous session. U.S. gold futures were steady at $3,300.60. In the latest move, U.S. President Donald Trump backed down from his 50% tariff threat against the European Union, delaying its implementation until July 9 to allow for negotiations between the White House and the 27-nation bloc.
Copper prices in London were stable on Wednesday, supported by improved risk appetite across financial markets following U.S. President Donald Trump's latest tariff respite, though a firm dollar kept gains in check. 3-month copper on the London Metal Exchange held its ground at $9,593.05 per metric ton by 0214 GMT. The most traded copper contract on the Shanghai Futures Exchange edged 0.1% higher to 78,390 yuan, $10,886.29 per ton.
We will now look at the top news in the agricultural sector.
Chicago wheat futures rose on Wednesday after U.S. crop condition ratings came in below market expectations, but prices remained under pressure as improving weather conditions in several major producers bolsters the supply outlook. The most active wheat contract on the Chicago Board of Trade was up 1% at $5.33 minus 1/2 a bushel, as of 0337 GMT. A short covering rally lifted wheat from a 5-year low of $5.06 1/4 earlier this month, but actual or forecast rain in the U.S. plains, parts of Europe, the Black Sea region and China have underlined expectations for plentiful supply, with prices plunging 2.6% on Tuesday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.